Welcome to Freelance Wallet. Today we're talking about something super important for freelancers: quarterly taxes. It is actually very simple. This is mostly for freelancers working in the USA. So, what are quarterly taxes? If you work for yourself, like a freelance writer, designer, virtual assistant, or sell things online, you usually don't have taxes taken out of your money. Instead, you pay taxes every few months on your own. These are called quarterly taxes. The IRS, that's the tax people in the US, doesn't want to wait until April to get your taxes. They want it in chunks throughout the year. This helps you too, so you're not stuck paying a huge amount at once. Here are the 4 due dates to remember: April 15th, June 15th, September 15th, January 15th of the next year. Mark them on your calendar. How to calculate your taxes. Let's say you're a freelance graphic designer. You expect to make $40,000 this year, and you figure out you'll owe about 25% in taxes. This includes federal, self-employment, and maybe state. That's $10,000 total. Now divide that by 4. You pay $2,500 every quarter. Another example. Let's say you're just getting started and expect to make $12,000 this year. 25% of that is $3,000 in taxes. So your quarterly payments would be $750 every 3 months. To make it easy, track everything. Use a notebook, spreadsheet, or app like QuickBooks or Wave. Open a separate savings account just for taxes. Every time you get paid, save about 25–30% of it for taxes. Quarterly taxes don't have to be scary. Just stay organized, pay on time, and don't be afraid to ask for help if you need it. Now, when you pay taxes as a self-employed, you have rights to a lot of deductions that can lower the taxes you owe. If at the end of the year you use this deductions and noticed you actually own less that you paid, don't worry. If you overpaid, you'll get a refund when you file your tax return at the end of the year. Example. Let's say you paid $10,000 in quarterly taxes, but after adding up your business deductions, like your laptop, home office, or supplies, your actual tax bill is only $7,000. That means the IRS owes you $3,000 back, and you'll get a tax refund just like people who work regular jobs. So it's not lost money. It just means you paid ahead, and now you get some of it back. If you found this helpful, hit the like button and subscribe to Freelance Wallet for more simple money tips for freelancers. Got questions? Drop them in the comments below. Thanks for watching, and see you next time.